Thank you,
With
Mark.
some of the geopolitical tensions calming for now, will the attention now turn to earnings and the economy? Joining us now is Partners Group Chief Investment Strategist Anastasia Amoroso. Great to see you.
Good to see you, too.
So everything we've been talking about that Brian said means you need a pretty good filter, I guess, on what you pay attention to, what you think is going to be a continuing issue and what we can ignore. So how does that net out to you?
That's right. I think that's exactly right, Michael, which is you sort of need this discard pile of things, of headlines that you just put into that and say, yeah, this is likely not going to happen or is going to require such an act of Congress that is unlikely to happen. And there's other stuff that actually does move the needle. I mean, just to go back to the Greenland issue for a minute, I will say that I think this was always the predictable and the expected outcome is that some sort of negotiation was going to take place. I don't think either party really wanted to risk the long-term rift of NATO. I don't think either party wanted to go back to the trade war, and certainly not President Trump, who's trying to win the midterm election. So I think it is a very predictable market development, which means, to your point, we can focus on what we can observe, and that is the earnings season. And the fact that we're still early innings of the earnings season, but we have 78, 79% of companies that are surprising to the upside, and they're beating earnings by close to 6%. So that means what is an 8% number could end up being a 12% number when it's all said and done, if the same trajectory persists. So that's the stuff you pay attention to.
Fundamentals, of course, but of course there are policy efforts that you can invest alongside, and that's one of the areas that you like. Home builders, Brian had mentioned it.
Yeah.
The administration seems to be hell-bent on making home affordability a top issue here.
That's right.
And we saw the ITB today do very well, not just today, year to date, with these efforts.
Look, I think it's going to be a big deal and possibly an investable topic, a theme for the rest of the year, because first of all, look at the move lower in mortgage rates. We went from 8% a year and a half ago to now 6.2%, or on a day-to-day basis, maybe it's even 6% or below, which means when you look at the mortgage to income ratio, it is now dropped to about 30%. It is close to potentially converging with a 25% rent to income ratio. And if we get there, that's what really moves the needle on housing. Now, I do think this is not the last time we hear about housing. I think there will be a number of efforts, maybe trying to steer the Fed in that direction, maybe trying to steer the federal agencies in that direction. But not only will Fannie and Freddie will be buying more mortgage-backed securities, but could you see something like a QE twist? Could you see some of the reinvestments going back into MBS to pressure those mortgage rates lower? I think we might.
Yeah, I mean, you're actually even sort of seeing that, right? There are small Treasury buybacks on the long end. They're issuing mostly on the short end. They're doing what they can in that regard. You mentioned that the earnings growth rate, looks like we're going to get up into maybe low mid-teens again. We also did that last quarter. The S&P 500 is kind of trading in the same zone as last earnings season, right? So it's sort of one of those things where, there'll be beneficiaries. Parts of this market are going to be able to take that and run with it. But on a total basis, we're not actually seeing aggregate progress.
Right. I think what's happened in the last month or two, you've had some concerns about the durability of the AI trade. And then, you start the year with a number of geopolitical concerns, and that's why the market sort of stalled out. But I do think we can get through geopolitics. I think we can persevere through that. I do think that the artificial intelligence trade is far from over. I think we're early innings, and yet the adoption of AI is actually accelerating. The productivity that AI is driving is tangible. So are the cost savings. So as long as that's the case, I do suspect that AI will still be a pillar for this market. And we've seen semiconductors, for example, rebound quite significantly today. And then on the other side, Melissa, to your point, I do see a broadening in the market. I actually think the U.S. consumer may be front and center this year, not only because of the housing market, but also if you look at various categories of inflation, they're coming down. Gasoline prices are coming down, and you've got the tax refunds, which should add close to 1% of GDP. So that's a very constructive backdrop for the consumer.